One of our IRA specialists here at Quest, and I work very closely with the rest of our marketing team to help put on all of these events for you guys. I'm super excited for today's class. Today's class, we have Anne-Marie Rogers, our sales officer, talking about Roth conversions and how Roth IRAs can really supercharge your retirement. Oops, sorry, I got something printing in my office right now. Hopefully that's not too much background noise for you guys. But before we get started, a little bit of background about who is Quest Trust Company. At Quest, we are a self-directed IRA custodian. We teach our clients how to utilize their old 401ks and IRAs to invest into assets outside of the stock market. So we have several IRA specialists on our staff. And again, sorry if the printing is a little loud for you guys. Gotta love, working at home during the day. But our biggest passion is really to educate investors across the country about how self-directed IRAs can not only help you grow money for your retirement, but also for your family, utilizing other people's IRAs. So you'll notice we put on a lot of classes, we host a lot of education, and we have a lot of resources for you guys as well to kind of connect with us one-on-one if you are interested in learning more about that. Now, I do have to touch on this bright yellow bullet point here at the bottom. That is our disclaimer. Please be aware that at Quest, we do not give tax, legal, or investment advice. We put on a lot of events, a lot of education, but always do your own due diligence before you enter into investments and make sure that you're taking the time to structure your deals properly. Now, as I've already hinted at, this is just one of many classes that we host here at Quest. We host live webinars every Tuesday, every Saturday. We have virtual networking happy hours where we can all jump on a Zoom meeting and network with other IRA investors from all across the country. That event has really been a lot of fun since we've started it, throughout all of this craziness of this last year and a half. So if you haven't joined us at one of our virtual happy hours, make sure to head on over to our website, go to our events. You can find the full schedule there and make sure to come join us and meet some other investors. Now, today's class, as well as all of our other webinars, can be rewatched at any time right here on our YouTube channel. So if you guys are interested in keeping up with all of our events that we host every week, make sure to subscribe to our YouTube channel. It really helps us out, and you're already here, so go ahead and click that little button. Again, really just kind of helps us out there. Now, you might have noticed I really rushed through those first couple of slides there because I really want to focus in on our biggest online event that we have coming up actually this weekend. This is QuestCon Live Forecasting 2022. It is a full 2-day online self-directed IRA conference. And at this event, we will actually have over 20 different guest speakers joining us. And the theme of this rendition of QuestCon Live is, where is the market at now? How have we gotten here? What do we, and all of the experts joining us see kind of as we get into the new year, interest rates, inflation, supply issues. There's a lot of things going on in our industry that, is kind of unprecedented when you combine it all together. So that's exactly what we'll be talking about at QuestCon. Again, it's this weekend. Our team has put in so much work behind the scenes for this event for you guys. And these are just a few of our many guest speakers. We've actually had a few confirmed since we put this slide together. You might notice I've added in a few at the bottom, even since the last time you guys saw these, but we have decades and decades of experience with our guest speakers of all different realms of real estate. We've got Brad Sumrock, Eddie Speed, John Heyer, Jeff Watson, many other people that you see here on the screen. So this is a bit of a higher level event. It's definitely a bit more robust than our weekly webinars that we host every single week. And due to that, it is one of the few paid events that we host. But I do have a little special for you guys here at the end of this slide. Just a few added bonuses with QuestCon. We will actually be hosting an exclusive virtual happy hour for all of our QuestCon attendees. We'll have an active Slack channel throughout the event. So even though it is online, you can network with other investors and, give feedback, post info about yourself, your business, pretty much through that Slack channel all through the entire weekend. Also, if you are a Quest client, we've got a little special for you guys. With your ticket purchase, you can actually get a free copy of the recording. You do have to be a Quest client to get that benefit, but it is something that we kind of like to throw in there. Now, This event is $69 for the full 2-day access, or if you want unlimited access to the recording after the event as well, it's 99 bucks, all 2 days, over 20 different guest speakers. And I have actually personally worked with our marketing team to really curate every single panel topic, every panel question on this event is really going to give a lot of value to you guys. So we're really excited about that. Be sure to head on over to questtrust.com, click on our events, and you can get your ticket right there. And if you guys have questions, let us know. We're always happy to help. We always love to hear your feedback about what you're thinking about our education. But most importantly, if you are looking to take control of your retirement, if you're looking to, just have more control over where your money is invested and have it grow faster, through things that you actually have control over, reach out to us. We're always happy to help. It is absolutely free to talk to an IRA specialist at any time. And there's our contact information, but I'll also post this in the comments for you guys. So without further ado, let me go ahead and stop sharing my screen. Lots of multitasking going on. And you can already see her on the screen here. We have Miss Anne-Marie Rogers. Anne-Marie has been with Quest for several years. She oversees our entire team of IRA specialists. And make sure to pay attention to today's topic. Roth IRAs are so valuable. I do all of my IRA investing in a Roth IRA. So Anne-Marie, go ahead and take it away. We're excited to have you teach today's class.
Thanks so much for the introduction, Haley. Sound check, everything sounds good on my end?
Yes.
Perfect. Okay. Well, as Haley said, we have a lot of exciting upcoming events. We have just recently resumed having our events back in person. The one that Haley was speaking about on this weekend, the 4th and 5th of December, that one will be virtual. But for those of you that may be tuning in from our Houston, Austin, or Dallas locations where we have offices, we also have some upcoming kind of Christmas holiday themed socials as well that will actually be back in person. So we'd love for you guys to attend those. Check out our website, questtrustcompany.com. We have an events section where you can get more information on some of these great events and also register to attend as well. Thank you guys for having me today. Happy to be here and talking about one of my very favorite topics, which is Roth IRAs. Specifically, we'll be focusing in today and talking more about Roth conversions, which really is the process of moving funds from maybe an old 401k or traditional IRA or other pre-tax account and deciding that you want to take the plunge and start getting those tax-free returns in a Roth IRA and thus converting over those funds. So without further ado, I'll go ahead and share my screen and we'll dive into the presentation. So the class today is called Supercharging Your Tax-Free Wealth, because that's really what a Roth IRA allows you to do, is it allows you to create completely tax-free wealth, not only for yourself, for your future retirement, but possibly also as a legacy play, as wealth that you may be able to pass on to your children, to your grandchildren, and other heirs of your account. And so Roth IRAs, especially lately, have even been in the media and we've been getting particular attention surrounding them due to some of the legislative changes that are going to be taking place. Some of those even taking place at the end of this year, starting on December 31st, will be the conclusion of some of your capabilities when it comes to Roth conversions. And so today's class will be a little bit different. We will, of course, talk a lot about Roth IRAs. We'll talk about Roth conversions, but we'll spend a little bit of time towards the beginning of the presentation, and we'll be talking about some of those legislative updates, because it is important that we talk about that now, because again, some of these changes are taking effect at the end of this year. So for some of you, you may not have the capability to continue doing conversions of some of your funds. We'll talk about what exactly that means shortly. And so it's important, at any time to consider a Roth IRA, but especially now, time is of the essence to consider this as some of these changes take effect. You want to be able to make sure that to some degree you're grandfathered in, that you have this account in place, perhaps consider doing a Roth conversion before you have some limited abilities there. As Haley said, my name is Anne Marie Rogers. I am our Vice President of Sales and Business Development. Been with the company for quite some time, coming up on 9 years now. It's been a pleasure to work with Quest, and I've had the opportunity to work not only in our Houston corporate office, which is where I presently work, but also in our Austin office where I used to work as well. So it's been great. And now really, my background with Quest is in the IRA side. I hold the designation of Certified IRA Services Professional, which is a designation through the Institute of Certified Bankers. But in the more recent years, I've taken that knowledge and really moved more into a role where I'm overseeing the sales and the business development that we do here at Quest. So chances are, if you've spoken to one of our IRA specialists, that's probably one of the people on my team. And we'd be happy, if you have not chatted with us, of course, to do a free consultation with you after the presentation. So again, happy to be here, and thanks for tuning in today. As always, we start with all of our presentations. Our disclaimer is just that Quest does not provide any tax, legal, investment, accounting, any type of advice. Basically, everything I'll talk about today is just strictly for educational purposes only. We encourage you to consult with attorneys and CPAs and other advisors before entering into any type of investment. Really, what this is breaking down to explaining is what our role is at Quest. Our role as a custodian is to provide a retirement account, and then also to some degree do the upkeep of that, right? We hold your funds, we process your investments, we process payments, receive payments back, all sorts of different things. But as a self-directed IRA, it's really up to our clients to choose their own investment. And so, of course, before engaging in any type of investment, we encourage them to consult with, their power team, their attorneys, their financial advisors, CPAs, and people of those sorts before doing any type of transaction to make sure that they're doing their good due diligence. So that's really what this is breaking down to explaining. Now, we won't spend too much time on this. Hopefully, most of you have already attended our Self-Directed IRA 101 class, which is really our basics or foundational class, where we talk a lot about what are self-directed IRAs, what are the different accounts, tax benefits, and more in depth about those foundational topics that you really have to be familiar with. So for this, we'll just do it a very, very high level description in case it is your first time joining us. But basically, what exactly is a self-directed IRA? Again, a self-directed IRA is an account where you're going to be the one that's able to choose all of your own investments. But there's really no difference in, quote unquote, a regular IRA versus a self-directed IRA. We like to say that really self-directed is kind of just a marketing term, right? It's trying to get across the point that you are self-directing or you're choosing your own investments. But the account types are exactly the same. Now, there are different types of IRAs, and we'll talk about that momentarily. There's traditional IRAs, there's Roth IRAs, there's SEP IRAs, and many other types of accounts as well. But what I mean by that is, let's say I have a Roth IRA at, insert whatever company. We'll use Fidelity because I have an account with them as well as one at Quest. My Fidelity Roth IRA and my Fidelity Quest Roth IRA are exactly the same account. The only difference is in what the companies are going to allow me to invest into with that account. So my Fidelity Roth, I'm going to be able to choose from, all different stock investments and mutual funds and CDs and all different types of publicly traded investments. With my Quest Roth IRA, I'm going to be able to choose from private assets. So things like real estate, notes, private companies, and things of that nature. Now, why would you want to do it? Some of the key reasons are diversification. When you're using a self-directed IRA, you're going to have the ability to reach that true diversification because it's likely that you've already got your funds in mutual funds, in CDs, in bonds, in annuities, in the stock market, right? In any of those publicly traded investments. By using a self-directed IRA, you're also able to invest in something more on the private side, real estate, notes, private companies, oil and gas, just to name a few of the many, many things that you can do inside of this type of account. So you really get that true diversification by having both public and private assets. Obviously, the key benefit here is when you're doing investments inside of a self-directed IRA and you begin generating profits or returns back from those investments, your profits return back into the account and you're not taxed on them. Now, there's different types of tax treatments, but for the most part, you're not going to be taxed when that money goes back into the account. Versus if I had done an investment personally, right, outside of my IRA and I made profit off of it, I'm probably going to have to pay taxes on that. In addition to that, some of the accounts that are available to our clients also have tax benefits, not just of the investment earnings, but also in situations where maybe you make a contribution into it. For example, if you owe taxes as tax season, is near approaching now that we're coming to the end of the year. We'll be talking about that soon as the new year begins. But for those of you that perhaps owe taxes, there's various strategies that you could implement, like making, for example, a contribution into perhaps a health savings account and receiving that tax deduction back. Right? So there's lots of different strategies that you can deploy, and we love to talk about all of those in the free education that we provide almost daily here at Quest. Social investing, one of the great things about investing in something like real estate, for example, versus maybe investing in the stock market is you really get to see the social impact that you're making. You can drive by, that real eyesore property, you can invest into it, you can beautify it, you can put people to work, you can flip the property, make profit, and put people in that property, maybe a family that goes out, supports the local community, right? Stimulates the local economy, sends their kids to the local school, and supports the local businesses. You can see the social impact a lot of times easier than maybe you can if you invest your funds into, a mutual fund, for example. And lastly, is self-direction allows you to invest in what you know best. Because as the account holder, it's your responsibility in a self-directed IRA to choose all of your own investments. And so the great part is that you're able to draw upon that knowledge, the expertise, the experience that you've got, and put that to good use inside of this account. Now, there's 7 accounts that we offer at Quest, including traditional and Roth IRAs, which fall under our personal plans. For those of you that perhaps have a rollover IRA, a traditional IRA, or perhaps you have an old 401k or pension or 403b or teacher retirement plan or one of those perhaps from an old job, all of these plans are typically going to roll over into either a traditional or a Roth IRA. Most of those accounts that I just named, most of those are going to be pre-tax accounts. And so typically they're going to roll into your traditional IRA because that has the same type of tax treatment. And so when that would occur, you're not going to be taxed when you'd move those funds over. But what we're going to be talking about today is doing a Roth conversion. Doing a Roth conversion would be moving funds maybe in that second step, that perhaps then you decide, hey, I'd like to move those funds into a Roth IRA and have tax-free earnings versus just tax deferred as a traditional. Remember, tax deferred and tax-free, kind of what's the difference there? Traditional IRA, as you're making your investment returns, right? I use my traditional IRA, I go out, I buy, let's say, a house in my self-directed IRA, and I flip it and I make profits. Well, my profits go back in my traditional and I don't pay tax on those. However, one day as I take my distributions, remember the account is called tax deferred. One day when I take my distributions, I will pay tax at that time. In contrast, Roth IRAs, if I did that same investment, again, I buy the house, I flip it, I make profit, my profit goes back into the account, I never pay tax on that. Why? Because the account is essentially growing tax-free. So you can really see the power of using a Roth IRA. We also have employer plans. This is going to be great for those of you that perhaps have your own small business, you work for yourself, maybe you don't work in corporate America where you've got one of those old 401ks or you've got a traditional IRA or something of that nature, right? Well, how do you save for the future? One of the great ways to do that is to set up your own employer plan, such as perhaps a SEP IRA, simple IRA, or a solo 401k, where you're able to make very significant contributions to this type of plan. Lastly, we have our specialty plans, our health savings account, and Coverdell Education Savings Account. Both of these accounts can be used immediately. So for the most part, our retirement accounts, when you make your profits, they go back in and, ideally you leave them in there until you're ready to retire. Well, with the specialty plans, you can immediately start taking distributions from these to pay for health expenses and education expenses completely tax free for yourself and for your children. So, again, very, very diverse group of accounts that we offer, all with unique benefits. And in fact, a lot of our clients even partner these together and are using multiple of them to do their investing. We have free classes on each of these. You can access them again on our website, questtrust.com. Now, all of these plans can be self-directed, and as I said, they can in fact even be partnered together. So we've certainly got clients who they have maybe their own retirement account, and then they've also got a health savings account where they're doing some investing, they're earning profits. And when their family has a medical expense that comes up, big or small, whether that's just, hey, I need to get some medication or, need to go for my annual eye exam or dental appointment or something like that, all the way up to the larger scale expenses like a surgery or x-rays, something of that sort. So you can in fact partner multiple accounts together to do one investment and start sending investment profits back to those different accounts to be used for those different reasons. So maybe some going back for health expenses, some going back as a long-term play for your retirement, maybe some going back for your kids' education, and so on and so forth. Now, it's important to remember that when you're doing this investing, it's going to be the IRA itself that's actually holding the asset. So the buyer of this investment is going to be the account itself. The account itself is the owner of the house or of the shares in the private company, or the IRA itself is the lender to another investor, right? Or the IRA is the owner of the mineral rights, or whatever the case may be, whatever investment that you choose to do in your self-directed account. And so it's actually going to be titled in the name of the IRA. So it shows Quest Trust Company, FBO, which stands for the benefit of, your first and last name, and your account number. The partnered vesting, the second one that you're seeing right here, the only difference is if you decided to partner, if you decided to do what I had mentioned and use maybe multiple accounts. For me personally, I've done an investment before where I partnered my IRA along with 7 other IRAs. We did a large scale deal where we needed a significant amount of funds that we were going to be lending out to an investor secured by that piece of real estate. And so we came together with 8 different IRAs in total, and we made that loan and got, about a 10% interest on that for the time frame of the loan. So you can partner with almost an unlimited amount of funds. So it's very common that we'll see situations where maybe, colleagues, business partners, even family members, if structured appropriately, can, partner together. So I've seen situations where maybe a husband has an IRA and a wife has an IRA, and they partner their funds together and they go in and they buy a house, or they, do a loan or invest in shares, or whatever the case may be. So definitely consider this, because it's a great strategy to implement if maybe you're just getting started and you don't have all the funds that you need. This can be a great way to bring in friends, family, even other funds that you may have not considered that are in other types of accounts that can also be utilized. Now, we've kind of gone through some of the many things that can be done inside of these accounts, but these are just a few other common things that we see here at Quest. Again, lots of real estate deals, private companies of all different types, notes, just to name a few. Now, let's stop and talk a little bit about some of the important legislative updates. You may have recently seen that there were some recent news reports that were coming out just in the last couple of months as there was some legislation that was going to be taking place. Now, obviously, there have been some shifts since the initial legislation. So if perhaps you saw this a couple months ago, some of those provisions have been kept in there and some have been removed. There are a significant amount of updates that are outside of what I'll talk about momentarily. So these are, again, not the only updates that do affect retirement accounts, but these were some of the really key ones that I wanted to focus on today as it relates to Roth IRAs specifically. So one of the ones that is back into the that has remained into the bill is that there is a cap on IRAs that's going to be implemented. Now, one of the changes that took place from the original writing to what is going to go through has gone through now is that the time frame has changed on this. Originally, it was going to take place also at the end of this year on December 31st, but they have moved it to 2029. So there'll be a $10 million cap on IRAs. And so what will happen is RMDs will begin to be required for individuals that have significant retirement accounts. You will not have to pay tax or the 10% penalty on these RMDs. Initially, it seemed like that was kind of something that was a little bit murky initially, but I guess a small win there if you do have to take those type of distributions. But really the ones that affect more of the, masses, more of the general public, certainly there's people that have significant retirement accounts, 10 million and up. But these next two are more so applicable for a larger amount of people. The one I really want to draw your attention to here is that Roth conversions will no longer be permitted of after-tax dollars at the end of this year. So for those of you that perhaps have funds in a traditional IRA that is after tax, perhaps you were not eligible to take a tax deduction due to your income or due to contributing to a 401k, which is something that you probably want to explore with your CPA. You may not even realize that perhaps in your traditional account, maybe you've got a kind of a mixed bag of pre and post-tax funds that have been in there. But as of December 31st, this will be the final day that you're able to convert after-tax amounts to Roth IRAs. You will not be able to do this anymore. So it's very, very important right now, if you've ever considered setting up a Roth IRA, if you've ever considered doing a Roth conversion, it is key to be considering doing this now. This is the time to talk to your CPA. This is the time to explore this, set up an account. At the end, I'll talk about a promotion that we're going to be doing where we're going to be completely waiving all of the setup fees, there's no fees for doing a Roth conversion. We're trying to make it as simple as possible for people. Or if you've got an existing Roth IRA, it's a free service. We'll help you to transfer over the funds. We're trying to make it as easy as possible for our clients right now because, we recognize that this is a significant shift that's going to be taking place on a really, really short time frame. So if you guys have questions, please reach out to our IRA specialist. At the end, I will have our information on there so that we can set up times to talk a little bit more about your personal situation. But again, this is kind of the time to take action and go ahead and set up these accounts as these changes start to take effect. Lastly is another huge shift is that there would be no conversions of any dollar figure, pre or post tax. So if you've got a traditional IRA or 401k come 2032, you would not be able to convert this at all any longer. Now, this only applies to individuals that are classified as higher income individuals. If you have questions on what that looks like, we can talk to you a little bit more about that on a one-on-one basis. But I will tell you, when we look at those, when we see, your combined income, it's actually not as high as you would expect in the classification in terms of what the income looked like. It was only around about 400,000 in terms of your income to be classified in this category. So definitely something to consider is setting up a Roth IRA before these changes start to take effect. Talk to your CPA, see if this makes sense for you, and maybe possibly even do those conversions before the end of this year. Now, there's two kind of categories of money that we were talking about: traditionals, which is tax deferred, versus that Roth tax free. So in terms of the Roth IRA, just to kind of fly through this section, the annual contribution that you're able to make to the plan depends on your age. If you're under 50, it'll be 6,000. If you're over 50, it'll be 7,000. That is unless you have income limitations on here. Now, this is important because if you fall into the category of not qualifying to make a Roth IRA contribution, we have lots of clients that perhaps still want to get money into a Roth IRA. And so what they'll do is they'll make a contribution to a traditional, because there is no income cap for a traditional, only for Roths. At any amount of money, you can make $1 billion, you can still put money into a traditional IRA, though you won't get the deduction, which is key. This is where these after-tax contributions could come from in a traditional IRA, is that if you did not qualify initially for that tax deduction when you made that deposit. And so what would be taking place is you would no longer be able to convert those funds over. So this is key. If you're looking to put funds in, maybe you've never had a Roth IRA before and you want to put funds in there, this is likely the last year that you're going to be able to do this, because you'll no longer be able to convert those after-tax dollars from your traditional into your Roth, meaning there's no way to put funds into a Roth IRA any longer if you're falling into these income brackets. So again, highly encourage you guys to do a consultation with one of our IRA specialists now, because it is completely free and time is of the essence as these changes begin to take effect. Why would someone want a Roth IRA? For those of you that may not be as familiar with the plan, prior year contributions can be funded until the tax filing deadline. So you're able to actually make Roth IRA contributions until April 15th. However, keep in mind that with this legislation, you would not be able to convert those funds until after December 31st. So it is key to put those in. Also, if you are not working, but perhaps your spouse is and you file jointly, you can actually make a contribution based on their income. And of course, the qualified distributions from a Roth IRA are completely tax-free forever. So this is also important because you can in fact even pass these on to future generations. And there's no required minimum distributions, unless of course you do fall into the category of having an IRA that's over 10 million. So, if you take a look at the average Joe, Joe is employed, works at his company for 20 years, has built up a nice sized retirement account, and Joe's not a real estate investor. So if Joe decided, hey, let me do a Roth conversion, basically what happens is when you do a conversion, again, moving money from a pre-tax to a post-tax account like a Roth IRA, so like, for example, moving a traditional to a Roth, when you do this, the dollar amount adds to your adjusted gross income and you're taxed on that. So this could cause him to be in a higher tax bracket. And with lower returns, this could take a very long time to offset in investment returns the amount of tax that was paid to do the conversion. But great news is we're not average. We're real estate investors. And so I have a story that I'll share with you now. This is a real story from one of our clients that did a Roth conversion prior to doing their investment, and it really made a lot of sense for them. They ended up, instead of doing the investment in a traditional IRA, they did a Roth conversion of $150,000. and they purchased this investment for 101,000 and fixed it up for 30,000. They ended up selling it just later that year, about 8 months later, for 239,000. So in the end, they made a profit of 94,000 that went back to the account completely tax free. Now, it doesn't have the dates on this slide, but they did this initial Roth conversion in about January or February of that year. Let's say I did a conversion in January of 2021, at the very beginning of this year. Well, when do I have to pay taxes on that conversion? Well, when do I pay taxes for the 2021 tax year? Well, I don't have to do that until April 15th, typically, right? So the point of this is saying is that this Roth conversion, you don't have to actually pay this tax until the following year. Is it feasible that you go out, you do investments, you make profit that offsets the amount of tax that you have to pay? In just one investment, Joe had made $94,000, right? He has to pay tax on the 150, but now in the Roth IRA, he has 150 plus the 94 completely tax free in there to use for the next investment. Everyone's situation is different for a Roth conversion, so it's important to explore it with your CPA. And again, we encourage you to chat with one of our IRA specialists to talk about it a little bit more and see if it makes sense for you. Some of the things to consider are, what are your assumptions about tax rates and tax laws generally in the future? Obviously, we see that there's some significant shifts that are taking place. With this legislation. So it's a great time to consider doing a Roth IRA and to some degree get grandfathered in, be able to do the conversions before the end of the year. Do you expect to be in a lower or a higher tax bracket when you retire? How do you want to pay the taxes? It is a consideration because when you do a conversion, you do have to pay taxes on the amount that you move over. And will the conversion put you into a higher tax bracket? So I thought that if I made too much money that I couldn't do a conversion. Anyone can turn a traditional IRA into a Roth IRA at any time. Again, this will be going away for after-tax dollars at the end of this year. Now, it is important that you talk to a CPA before doing this. Previously, if you did a conversion, you were able to reverse it if you perhaps couldn't pay the taxes on that, or perhaps it wasn't a good fit in the end. But back in 2019, that did change. So conversions are irreversible at this time. It's important to also remember that you don't have to do all of your funds. So maybe you have a traditional IRA, for example, and it's got, I don't know, $500,000 in there. Well, maybe you don't want to move the full balance of the account over because that's going to be a significant tax bill. Instead, you could perhaps just do a partial amount. Maybe you do 50,000, right? 75,000, whatever amount that you want, maybe to stay under a certain tax threshold, maybe how much you need for a deal, but you can do just a partial amount. And in fact, you can even convert over assets. So a lot of our clients are not even aware of this, but if you've already got an investment, right, a house, shares in a company, whatever investment that you may already have with us and be considering a Roth IRA, you can in fact even convert over assets into a Roth IRA as well. Really, the ultimate question is, do you want to pay taxes on the acorn, pay tax on a small amount that you convert over into a Roth IRA, do investments, and make tax-free money long term? So I hope this class was helpful in giving you a brief understanding of Roth conversions and some of the importance of why you should do this now. I did want to take a minute and just go over a holiday sale that we have going on right now through through the 10th of December. We're going to be waiving the setup fee for all Roth IRAs. There's also no fee to transfer over funds into any type of account. Quest will take care of that and help you do that. There's no fee to do a Roth conversion. So it's a great time to set up a Roth IRA now. Get some contributions in there. Consider moving funds into this plan, either by transfer, by conversion. It's a great time to do that, especially with all of the fees being waived and with some of the changes that will take place at the end of the year. So highly, highly encourage you guys to set up your Roth IRA. And of course, attend our event as well that we have coming up this weekend that Haley spoke about at the beginning. Uh, if you would like to set up a consultation with one of our IRA specialists, you can do so in several different ways. We have a live chat feature on our website that is manned by our IRA specialists. So you're talking to a real live person, not a robot on there. It's a real person that can help answer your questions. You can also call us at 855-FUN-IRAs or email us at iraspecialists@questtrust.com, or take out your phone and use this QR code. You're probably familiar with that. No, most restaurants and bars and things now are using that, obviously to be COVID safe, but take out your phone, open up your camera, and you can use that QR code to directly schedule an appointment with our IRA specialist that way as well. It'll take you right to a calendar where you can block it off on your calendar as well, and it'll send you an invitation. So thank you guys again so much for attending today's class. It's been a pleasure being with you. Check out our website, questtrustcompany.com, for some of our upcoming events, as well as to register to attend or reach out to us. We'd love to chat with you more about setting up your Roth IRA today.
Awesome, Anne Marie. Well, thank you for that great class. It's so crazy, this legislation right now. I know our world has been crazy. Whoops. For the last couple of months. So I did just have one question for you. It doesn't look like we really have any questions from the audience at this time, but if someone's looking to stay up to date with this legislation, all these changes that are getting announced, does Quest have any resources for that? Are there other external resources that you could recommend?
Yes, definitely. We have so many resources for those of you that are looking to get more information, not only on the updates that I talked about today in terms of the legislation, because again, there are many, many other important things that we want you to be familiar with this bill that's going through that are outside of just Roth IRAs as well. But check out our website. If you go to questtrustcompany.com, right on our website, there's a scrolling image, in fact, where you can get a full listing of all of the changes, some of the things that have been thrown out of the bill and some of the things that are back in. We also have some links on there to other external resources. One of our favorite resources in the industry for IRA information is John Heyer, and he's got a wealth of information on his website as well. But we've got links on our website that'll take you right there.
Mm-hmm. Awesome, Anne Marie. Well, thank you so much for taking the time to teach today's class, especially with these changes upcoming with Roth IRAs. I think it's so important. You know how much we have done education about Roth conversions and Roth IRAs before any of this even came up. So guys, this is important. Make sure you pay attention and reach out to an IRA specialist if you have questions. Let us help you get started, or kind of walk you through your different options that you have. And that's all we've got. So Anne Marie, thanks for joining us. All of our attendees, I hope you'll have a fantastic day.
Thanks. Have a good one, you guys.